Okay, close corporation. Let me wait slideshow. What's going on? Okay, from current slide. Okay. So what are you expected to know after this lesson or after this topic? So the first thing that you are expected to know is to describe the attributes of close cooperation and convey the major advantages and disadvantages of thereof. So you just need to describe to know how to describe what close cooperation is, and you should also know the advantages and disadvantages of registering your company as a close corporation or having choosing close cooperation as the ownership of your company. So you should know the advantages and disadvantages. The next thing is that you should name the statutory requirements with regards to the membership of close cooperation. So this is another objective that you should know, that you should know the requirements involved when you are to become a member of a close corporation, or when you want to register your company as a close corporation. So there are certain requirements that you should have. So you should know all that. And then you should also be able to give an overview of the circumstances in which members and others are jointly liable for the debt of a close corporation. Remember that a close corporation is a company that, or is a form of business that is made up of one person, one or more people, and they are called members. So close corporation, the owners of the business are called members. Okay, so again, another thing, you should also be able to briefly explain the tax position of a close corporation and its members, and also to be able to convey the statutory requirements in respect of the keeping of accounting records and the preparation of financial statements of a close corporation. And then we move on. You should be able to explain the statutory requirements in respect of the accounting officers. Remember that it was of the accounting of the members of close cooperation first, and then the requirements of in respect of the accounting records, and then now in this case is accounting officers' appointments and duties. And then also the requirements in respect of the distribution of the total comprehensive income, how the total comprehensive income is to be distributed among the members. And then you should be able to record distribution of total comprehensive income. And then the last thing, you should be able to explain the provisions of the Close Corporation Act with regard to the deregistration of a close corporation. When you want to deregister your close corporation, what are the provisions involved? Okay, so moving on to the introduction, we said that a close corporation introduced by the Close Corporation Amendment Act number 26 of 1988 is amended by the Close Corporation Amendment Act of 1994 is an alternative organizational form. So all these are not really important for now, especially because of time. So this type of entity provides a simple and a relatively inexpensive legal form for small businesses. That's why you find most of the small businesses opt to register their companies as a CC, as a close corporation, because it's not expensive compared to registering companies, other companies like limited companies and public companies. So close corporation is the cheapest legal form of a business. And then a close corporation may have one. We say that it can be made up of 1 to a maximum of 10 members, all of whom are usually natural persons, people that are not involved in other companies, owning other companies. And then an incorporated entity, for example, a company is not a natural person. and may therefore not become a member of a closed corporation. So having an entity or like having a company, so the company cannot, or the owner of the company, if you have a company already, you cannot be a member of a closed corporation, meaning that you are not a natural person in that way. And then the capital which a member contributes to a closed corporation is therefore as contribution. Remember, we have been speaking of partnership. Ne? Partnership, usually their capital is known as capital. Ne? And in this case, now the capital which members in this closed corporation, the capital is referred to as contribution. Ne? In that, when members contribute to the closed corporation, it is usually referred to as contribution, their capital. So such a contribution must be stated in the founding statement of a closed corporation. So let's look at characteristics of closed corporation. So again, we say that they have the capacity and powers of a natural person, of full capacity so far as juristic person is capable of having such capacity or exercising such powers, meaning that for as long as the person is natural, it's not a company, or is not an owner of a certain other company, then they can join, or they can be members of a partner, and they can also exercise such powers of a closed corporation. And then a CC, again, it can continue to exist under its registered name, irrespective of changes in its membership. Unlike compared to partnership, when there is changes in membership, what they do is they close off all the books and then start over again a new page. That's what they always do. When a partner dies, when they admit a new partner and everything, or when a partner resigns, what they do is they have to close off all the books, and then they form another partnership. Now, in this case, with a closed corporation, whether you resign, whether you admit a new member, the CC continues to exist. It continues to exist. And then again, this attribute can be referred to as unlimited existence. Unlike partnership that has limited existence, if all the partners die, let me say, or resign, then the partnership will come to an end. But with a CC, if all the partners that started up the CC resign, then the CC can still continue with new partners without having to close it off. That's why it is unlimited existence. And then a closed corporation thus continues to exist until it is deregistered or liquidated in terms of closed corporation. Meaning closed corporation only comes to an end when it's either deregistered or liquidated. That's the only time it closes. And then again, these are just characteristics, and we said you should just know. So you should, out of these characteristics, you should be able to give advantages now and disadvantages of closed corporation. This is usually just theory in case you are asked. But the main important thing here is the calculations. So calculations are the main important thing. That's why we will not really take time in the theory part. So again, these are just characteristics of CC, so we can all go through. Theory does not really take a lot of marks. That's why we're not going to spend a lot of time there. So let's again look in this. Again, the characteristics of CC. In terms of the closed corporation act, a closed corporation must comply with specific liquidity and solvency requirements whenever certain payments, such as the distribution of the total comprehensive income, are made. So let's look at those requirements. A closed corporation complies with these requirements when the assets thereof at fair value exceed its liabilities after such payment has been made, and also the closed corporation before and after such a payment has been made is able to pay its debt as they become due in the ordinary course of its business. And then let's look at the source of income. How do they where do they get their finances from? Just like other forms of entity or forms of ownership, they can be financed by investors and also borrowed funds. Now, investors in this case, these are members. If you want to become a member, you contribute your membership contribution, then you can become a member of the entity. So investors are known as members' contribution. Each member has an interest expressed as a percentage. Ne? Just like partnership, usually their interest is expressed as ratios. Usually they use ratios, but in this case, each member his or her interest is expressed as a percentage. So it's just similar to partnership. No requirement for a member's interest to be in proportion to his share of members' contribution. So there's not really any requirement for a member's interest. And then let's look at borrowed funds. Now, how do they borrow funds? So first, they can borrow funds from their members. They can get funds from their members. This is known as loans from members. So a certain member has maybe a spare 10,000 that they are not using, then they can give it to the CC as a loan. And then from external sources like banks or other financial institutions that are not part of the closed corporation. And then we move on. Financial assistance by a corporation in respect of acquisition of members' interest. Now, in this case, a corporation may give financial assistance, whether directly or indirectly, whether by means of a loan. Now, in this case, this is when a closed corporation gives assistance to its members or get assistance from its members. Now it says that whether directly or indirectly and whether by means of a loan, guarantee the provision of security or otherwise for the purpose of or in connection with any acquisition of a member's interest in that corporation by any person only with the previously obtained written consent of every member of the corporation for specific assistance. So there should be a written consent of every member before they give that financial assistance. And again, if after such a assistance is given, the corporation's assets fairly valued exceed all its liabilities. And again, if the corporation is able to pay its debts as they become due in an ordinary course of its business, that's on when they can give financial assistance, only when they are able to pay their debts as they become due. And also if such assistance will, in the particular circumstances, not in fact render the corporation unable to pay its debts as they become due in ordinary course of its business. Again, they can only give financial assistance when, in a case where if they give that assistance, it will not render or it will not hinder or it will not lead to the closed corporation not being able to pay off their debts. And then this is just a name and registration of a closed corporation. Here again, this is not really important. Again, it's just some information of how you register your closed corporation, what you do, the steps of registering your closed corporation. So it's not really important. And so we're not gonna spend time there. Again here, this is just steps on registering your closed corporation. So you can go through still theory. And then this continues again. It says the size expressed as a percentage of each member's interest in the closed corporation. This actually depends to the contribution that you make, and then particulars of the contribution of each proposed members to the closed corporation. Now, this includes any amount of money and a description as well as a statement of the fair value of any property or service rendered in connection with the formation of the proposed corporation, either when you bring in when you bring in, for instance, an asset, or when you render service in a form of contribution. If you do not have money, then you decide to render service to the closed corporation, that in a form of contribution. And then you will need the name and postal address of the qualified person who or firm which has consent in writing to his appointment as the accounting officer of the proposed closed corporation. Again, these are just the steps, everything that you need to do when you are registering your closed corporation. So you can just go through. And then these ones are just the membership requirements, meaning for you to become a member, what are the requirements? Again, this is just theory. The closed corporation may have one, I said, or more members, but at any time they should never exceed 10 members. So the first one, it says they should be natural people. They should be natural persons, meaning they should not be involved in other companies, like the owner of, let me say the owner of a certain company can't join a closed corporation, or a certain company cannot join a closed corporation. So they should be natural people. And then, yeah, and then all these are just requirements of becoming a member. Again, membership requirements, nature of members' interest. So the interest of any member in a corporation shall be a single interest expressed as a percentage. So the interest of any member in the corp. Now, when we talk of members' interest, members' interest, this simply means like their percentage share in the profit, their percentage share in the closed corporation. If you're asked to calculate your members' interest, if you're asked to calculate the members' interest, that's what you need to calculate, their percentage in the membership in the closed corporation. And then 2 or more persons shall not be joint holders of the same members' interest in a closed corporation. So again, members' interest should only be of one person. Each member should have his own interest. So 2 or more people cannot share an interest in the corporation. And then we have certificate of members' interest. Now, each member of a corporation shall be issued with a certificate signed by or on behalf of every member of that corporation, and stating the current percentage of such members' interest in the corporation. So every member will get, every member in this case will have to get a certificate of their members' interest when they join the partnership. And then we have representation of members. So a minor who is a member, a minor meaning a person who is under the age of 21, who is a member of a corporation, other than a minor whose guardian has lodged a written consent referred to in section 47 in the Closed Corporation Act, shall be represented in the corporation by his guardian. This is when a person registers his or her kid as a member, then they should be always they should be represented by their guardians until they are 21 years. And then circumstances in which members can lose their limited liability. Here, how can members lose their limited liabilities. Hope we all know what limited liability is. Limited liabilities is when limited liabilities is when you will be if the company, let me say, goes bankrupt, ne? If the company goes bankrupt, you won't lose your assets. You won't be responsible to, like, the company is a different entity from the owners or from the members. That's limited liability. So if the company bankrupt, if the company goes bankrupt, the banks and all the creditors won't come after your properties. That is limited liability. So how can members lose now their limited liabilities? Notwithstanding anything to the control contained in any provisions of this act, the following person shall, in the following circumstances, together with a corporation, be jointly and severally liable for the specified debts of the corporation. This is where the name of the corporation is in any way used without the abbreviation CC. So if you use, it's a closed corporation, but yet you are using your name without the CC, then obviously in that case, you will have unlimited liabilities as required by section 22(1). Okay. And then again, this is just theory explaining how members can lose their limited liability. So you can just go through. This is not really necessary right now because of time. This is still just different ways members can lose their limited liability. So yeah, you can go through with time. And then all this, it's just theory. So let's look at the accounting officers and disclosure requirements. So we only have less than a minute left. We only have a minute and seconds left. So once the session ends itself, I will quickly just restart and then we can continue. So accounting officers and disclosure requirements. So every CC must appoint an accounting officer who is a member of a recognized professional accounting body. And then we have a lot of accountants, we have a lot of accounting officers in Namibia. So you should, if you are to come up with a CC, or if you are to register your company as a CC, you should appoint an accounting officer. And then the professional body must require entrance examinations in accounting and related studies, and must have the power to take disciplinary action against members guilty of negligence. So the accounting officer must determine whether the annual financial statements are in agreement with the accounting records of the CC. So CC also have requirements of drawing up their financial statements. Their financial statements are different from those of a partnership and different from those of a limited company and public company. So they have their own requirements. So the officer makes sure that the CC's annual statements are in agreement with the accounting records of a CC. And then he's also responsible to determine the accounting policies applied in the preparation of AFS, accounting financial standards.